In today's video, I'm going to teach you how to use Tradervue Trade Duration. By the end, you'll know exactly where to find the key duration views in Tradervue and how to interpret them to learn more about your trading habits and performance. First, start by logging in to Tradervue the same way you normally do. It helps if your recent trades are already imported and your time zone and trading sessions are set correctly, since duration is based on when trades open and close. Once you're in, head to the Reports area. This is where Tradervue aggregates your results and turns raw executions into insights. Within Reports, open the Detailed Report tab. Think of this tab as your analysis workspace. It contains multiple visualizations and tables that break down your trading from different angles. If you don't immediately see what you're looking for, give the page a moment to load and scroll. The duration-related views are part of this section. Now, look for two specific views: trade distribution by duration and performance by duration. These two work together to answer both the what and the how well of your holding times. Trade distribution by duration shows how many of your trades fall into buckets, such as intraday versus multi-day, or trades held longer than a day. In simple terms, it tells you your mix. Are you mostly closing positions the same day, or do you tend to hold overnight or beyond? Use this to understand your natural holding tendencies. If you notice a heavy concentration in intraday, that might confirm you're primarily a day trader. If you see a spread into multi-day buckets, it suggests you regularly swing trades as well. The point here is to get a clear picture of your behavior before judging results. After you understand the mix, move to Performance by Duration. This view shows how your profit and loss differs across those same duration groups. Here you can quickly spot where you're most effective. If intraday shows stronger P&L than multi-day, that may indicate your edge is sharper when you close positions by the end of the session. If the opposite is true, you might consider letting certain setups work over multiple days. As you interpret this, keep an eye on the sample size. A small number of trades in a bucket can make results look better or worse than they truly are. To make your analysis cleaner, review a consistent date range and consider filtering your trades the same way you manage your journal, so you're comparing similar strategies. Wrap up by pairing what you see in distribution with what you learn in performance, and use that combination to refine your trade planning and risk management.